All right, let's jump right in.
Okay.
We are doing a deep dive into Aarti Industries Limited today.
Sounds good.
And you've given me a front row seat with this analyst transcript from their latest investor meeting.
It's a great one.
So for anyone who's not familiar, Aarti Industries is a big deal in the
Yeah,
world of chemicals.
for sure.
They've been around for 40 years.
Wow.
They're major players in anything benzene or toluene based.
Yeah.
Over 100 products, 16 plants across the globe, and a client list over 1,100 strong.
And what's pretty amazing is their commitment to sustainability,
Oh, yeah.
especially for a company in this industry.
Oh.
11 of their 16 plants operate with zero liquid discharge,
Really?
meaning they're incredibly water efficient.
That's very cool.
Yeah.
Okay, so let's get into their recent performance.
Right.
The Q2 and H1 FY25 highlights paint an interesting picture.
Yeah.
They're seeing year-over-year profit growth, which is great.
Mm-hmm.
But there was a dip in the most recent quarter.
Yeah.
What happened there?
Their energy business took a bit of a hit,
Okay.
specifically a chemical they produce called methyl methacrylate, or MMA.
Okay.
It's a key ingredient in boosting fuel octane, but there were some global shifts in refining economics that impacted demand.
So break this down for me. What kind of global shifts are we talking about, and how did that impact MMA?
Well, the price difference between gasoline and naphtha basically crashed in Q2.
Oh, wow.
Naphtha is a key component in gasoline production.
Right.
And when that price difference narrows, it throws off the economics of using MMA as an octane booster.
Okay, yeah, makes sense.
Yeah.
But I see here that AL is still very bullish on MMA in the long run.
Yeah, they are.
They're even diversifying their customer base,
Mhm.
especially in the U.S. That seems like a pretty bold move considering the recent dip.
Yeah.
What's their thinking there?
It's a calculated risk.
Sure.
The global demand for octane boosters is expected to rise,
Okay.
and AL wants to be a leader in that space.
Makes sense.
They're not just selling MMA. They're actively educating potential customers about its benefits.
Okay.
It's a smart long-term play.
So zooming out a bit, let's look at their different business segments.
All right.
First up, agrochemicals and fertilizers.
Okay.
This segment's facing some headwinds.
Yeah.
Oversupply from the pandemic era
Mm-hmm.
and some unpredictable weather patterns are creating challenges.
It's a tough market, but AIL is fighting back.
Oh.
They're laser focused on gaining market share and developing new products to squeeze the most out of their current capacity.
Right.
They're also exploring backward integration in some areas, which
Right.
means bringing some production processes in-house to control costs and boost their margins.
Makes sense. What about dyes, pigments, and printing inks? Looks like they're seeing steady growth there tied to the overall economy.
Right, and they're also getting a boost from industry consolidation.
Okay.
As bigger players emerge,
Yeah.
they're placing larger orders, which is good news for AIL.
Sure.
Plus, there are ongoing anti-dumping investigations into certain dyes and pigments coming from China,
Oh, wow.
which could lead to increased demand for AIL's products.
Interesting.
Yeah.
Now back to energy additives.
Yeah.
We talked about the MMA situation, but they also produce calcium chloride.
Yeah,
This segment seems heavily export-driven.
absolutely.
Oh, wow.
77% of their energy additives production goes international.
Oh,
And they've invested heavily in bulk shipment capabilities to cater to those large overseas clients.
smart move.
Mm-hmm.
All right. What about pharmaceuticals?
Okay.
Looks like solid and stable growth here, mostly in the domestic Indian market.
Yes, and they're benefiting from regulatory changes in the U.S. that are creating opportunities for Indian pharmaceutical companies.
Wow.
But they are facing some pricing pressure due to overcapacity in China. To counter this,
Yeah.
they're focusing on cost improvement and seeking out export opportunities in niche markets with higher margins.
So being strategic and adaptable.
Exactly.
And finally, polymers and additives. Another export-heavy segment.
Yes, about 85% of the segment goes overseas.
Okay.
They're seeing steady growth,
Okay.
but they have to navigate global trade barriers,
Yeah.
especially in key markets like the U.S., Europe, and Japan.
It's impressive how they're not shying away from those challenges
Yeah,
and are actively finding ways to capture market share.
absolutely.
So we've got the big picture of their different segments, a mixed bag with some wins and some challenges.
Right.
But AL also has a unique approach with these long-term contracts they've discussed.
They do.
They specifically highlighted 6 of them.
Okay.
What can you tell me about those?
These contracts give us a really interesting insight into their business relationships and how they adapt to the ever-changing market.
Let's hear it.
Okay.
What's the story with these contracts?
Well, for starters, one of them,
Yeah.
a 10-year deal, was actually canceled back in 2020.
Oh, wow, that's a big change.
Yeah.
What happened?
They received a substantial compensation of $120 million for the cancellation,
Oh.
but they didn't let that idle capacity go to waste.
Oh.
They've repurposed part of the plant,
Mhm.
but the downstream section is still underutilized.
So they've got some breathing room to figure out the best way to leverage that space.
Yeah.
What about the other contracts? What kind of insights are we getting from those?
We see a mix of successes, works in progress, and some interesting strategies to manage risk and volatility.
Let's dive into those details then. Tell me about the success stories. What are the highlights?
One standout is a 20-year supply agreement
Okay.
for specialty chemical intermediates. It's running at full capacity,
Wait,
and this year has been their most successful yet.
that's fantastic.
Yeah.
Anything else that makes this contract particularly noteworthy?
What's really interesting is that the EBITDA for this contract is protected
Okay.
and not linked to the actual volumes they produce.
So they're guaranteed that money no matter what.
Exactly.
That's great.
It's a testament to their negotiation skills and their ability to structure contracts to ensure stable revenue,
Yeah.
regardless of market fluctuations.
Smart move.
Hmm.
Okay, what about the other contracts? Are there any that are still ramping up or facing unique challenges?
There's another 10-year deal,
Wait.
also for specialty chemical intermediates, that's progressing well,
Okay,
but is expected to fully ramp up to peak levels in FY27.
so a bit slower than anticipated,
Yeah.
but still moving in the right direction. What caused the delay?
Product stabilization and qualification took a little longer than initially projected. However, they've already started receiving commercial orders and delivering product.
Okay,
So it's just a matter of time before it reaches full potential.
that makes sense.
Hmm.
Are there any other contracts that are tied to specific markets or industries that are worth highlighting?
There's one for an agrochemical intermediate
Okay.
that's also on track to reach peak levels in the next 18 months.
So more good news on that front.
Yes.
Anything else that stands out?
Well, they did recently expand capacity for this particular molecule.
Okay.
So as that expansion comes online,
Yeah.
we should see a corresponding increase in the contractual volumes.
It seems like they're really good at planning and anticipating future demand.
Yeah, they are.
What about the remaining contracts?
Okay.
Any surprises there?
There's one that's a bit different from the others.
Okay.
A 4-year contract
Okay.
for a niche specialty chemical
All right.
that's directly tied to the volatile oil and gas market.
Oh, that sounds like a roller coaster ride.
Yeah.
How are they managing that?
As you can imagine, they're experiencing month-to-month volatility in this contract,
I bet.
but they're confident in its long-term potential.
Okay.
Yeah.
That takes guts. All right. Tell me about the last contract.
Okay.
What's the story there?
The final contract isn't actually a supply contract,
Right.
but rather a 20-year sourcing contract for nitric acid.
Interesting. So they're locking in a reliable source of a key raw material for the long haul.
Exactly. It's a savvy move to mitigate supply chain risk and guarantee they have the resources to keep those plants running smoothly.
Yeah, I bet that peace of mind is invaluable in an industry like this.
For sure.
Anything else about this contract that's worth noting?
It gets even better.
Okay.
They're projecting significant cost savings from this contract starting in the second half of FY26.
Oh, wow.
So they're getting supply security and a boost to their bottom line.
Yeah.
It's a win-win.
Talk about strategic thinking.
Yeah.
So we've covered a lot of ground with these long-term contracts.
We have.
They're really giving us a glimpse into how AIL operates
Mhm.
and how they're planning for the future.
Absolutely.
But they've also laid out a pretty ambitious 3-year roadmap.
Right.
What are the key takeaways there?
Their roadmap focuses on boosting profitability through 3 main avenues:
Okay.
cost optimization, volume and margin ramp-up, and CapEx-led growth.
Okay, let's unpack those one by one.
All right.
What's their strategy for cost optimization? What are they doing to streamline their operations?
They're aiming to achieve an additional euro 150-200 crores in EBITDA through a combination of measures,
Okay.
including energy efficiency, waste reduction, and operational streamlining.
That's quite a target.
Yeah.
What specific initiatives are they undertaking to achieve those savings?
They're implementing a range of initiatives.
Okay.
They're installing back pressure turbines to generate electricity more efficiently,
Okay.
expanding their use of renewable energy sources like solar power,
Okay.
and optimizing their use of waste energy streams.
Wow. They're really committed to sustainability, and it's saving them money in the process. Very smart.
Hmm.
What about operational streamlining? What are they doing on that front?
They've been investing heavily in expanding their capacity,
Right.
and they're now looking at ways to streamline their operations and reduce fixed costs
Okay.
to maximize the return on those investments. It's all about becoming more efficient and agile.
All right, so moving on to their second focus area,
Yeah.
volume and margin ramp up.
Okay.
What's the game plan there? How are they planning to boost their bottom line?
They're looking to leverage those capacity expansions we talked about to drive significant volume growth,
Right.
particularly in their acid, DCB, and NCB chains where expansions were completed a bit earlier.
So they're capitalizing on those investments and getting ready to scale up production.
Exactly.
Are there any other areas where they're expecting to see volume growth?
They're also anticipating ramp-ups in the recently expanded NT, ethylation, and MMA capacities, but those will take a bit longer to fully materialize.
So a phased approach to match market demand. Makes sense.
Okay.
Okay, let's talk about their third focus area, CapEx-led growth.
Okay.
What does that entail? What kind of investments are they making for the future?
They've got some exciting projects in the works.
Okay,
First,
yeah.
there's a brand new pilot plant in Zone 4
Right.
that's designed to accelerate their new product development process.
Interesting. What will that pilot plant allow them to do?
It's going to allow them to test and refine new chemistries and products
Okay.
on a smaller scale before they commit to full-scale production.
So it's like a testing ground where they can experiment and innovate more quickly and efficiently.
Exactly.
What other investments are they making?
They're also constructing a multi-purpose plant in Zone 4 that should be operational by the middle of next year.
What's the significance of a multi-purpose plant?
It gives them incredible flexibility.
Okay.
They can produce a variety of molecules
Yes.
depending on market demand and margin profiles. It's like having a chemistry set that can adapt to whatever the market throws their way.
That's a great analogy. It sounds like they're really positioning themselves to be agile and responsive.
Yeah, they are.
Anything else on the investment front that's noteworthy?
They also have a joint venture with UPL
Okay.
that's expected to start contributing to their bottom line towards the end of FY28.
What's the strategy behind that joint venture? What are they hoping to achieve with that partnership?
It's a strategic move to tap into new markets and expand their product portfolio. It's a great example of how AIL is leveraging partnerships to fuel growth.
Smart move.
Yeah.
They're thinking long term. But it sounds like they're not just focusing on these next 3 years. They're also making some strategic bets on the future.
Absolutely.
We're talking about asset-like growth, which means leveraging their R&D and tech capabilities to develop new chemistries,
Right.
but partnering with other companies to handle the production and commercialization.
Exactly.
So they're providing the brain power and their partners are handling the heavy lifting.
That's one way to put it.
Yeah.
It minimizes their capital investment
Right.
while still allowing them to capture new growth opportunities.
Yeah.
It's a very efficient way to leverage their core competencies.
It sounds like a win-win for everyone involved.
Yeah,
They also mentioned strategic alliances as part of their long-term strategy.
right.
What are those all about?
They have over 5 active projects in various stages of discussion.
Okay.
These alliances cover a wide range of initiatives, from backward integration to secure key raw materials
Okay.
to collaborations on new products for diverse end markets.
So they're building a network of partnerships
Yeah.
to strengthen their position and create new avenues for growth. It seems like they're really thinking about the big picture and the long game.
They are.
They're also venturing into some exciting new sectors, circularity and chemical recycling,
Yes.
electronic chemicals, and specialized chemicals for battery materials.
Yeah, it's a pretty diverse portfolio.
Now that's interesting. What's driving their interest in these areas? Why those specific sectors?
They're clearly paying attention to emerging trends.
Okay.
Circularity and recycling are becoming increasingly important in every industry.
Sure.
And the demand for electronic chemicals and battery materials is going to explode as technology advances.
So they're not just jumping on the bandwagon.
Right.
They're bringing their deep knowledge of chemistry to the table,
Exactly.
which gives them a real edge.
They're not afraid to embrace change and prod the boundaries of what's possible.
It's inspiring to see a company like this that's so forward-thinking and committed to innovation.
For sure.
So we've covered a lot about AL's current state and their plans for the future.
We have.
But let's take a closer look at those 6 long-term contracts we touched on earlier.
All right.
They offer a fascinating glimpse into how AL is navigating the complexities of the chemical market.
Yeah. Each contract has its own unique story.
Yeah.
Showcasing their adaptability and strategic thinking.
All right, let's break them down one by one.
Okay.
We talked about the 10-year deal that was canceled and the 20-year success story. But what about the others? Where are they in their life cycle? And what challenges or opportunities do they present for AL?
Let's start with that contract for the agrochemical intermediate.
Okay.
It's currently progressing as planned
All right.
and is on track to reach peak levels within the next 18 months.
Okay, great.
They've recently invested in expanding their capacity for this specific molecule. So
Mhm.
as that expansion ramps up, we should see a corresponding increase in the contractual volumes.
Okay, so smooth sailing on that one.
Yeah.
What about the contract tied to the oil and gas market?
Okay.
That one seemed a bit more unpredictable.
Yes. That 4-year contract for the niche specialty chemical is definitely subject to more volatility
Right.
due to its connection to the oil and gas sector.
For sure.
They're seeing month-to-month fluctuations,
Right.
but they seem to be managing it well.
They must have nerves of steel to operate in that market.
Yeah.
All right, so that leaves us with one last contract to discuss,
Okay.
the nitric acid sourcing agreement.
Right.
That 20-year contract is all about securing a reliable and cost-effective supply of a critical raw material.
Exactly.
It's a smart move to mitigate supply chain risks
Yeah,
and ensure they have a consistent stream of what they need to keep their operations running smoothly.
for sure.
And they're expecting significant cost savings from this contract starting in the second half of FY26.
They are.
It's like a double win supply security and a boost to their bottom line.
Absolutely. AL is clearly thinking strategically about all aspects of their business,
Yeah.
from diversifying their customer base
Right.
to optimizing their operations to securing those critical raw materials.
Yeah.
They're making moves to position themselves for long-term success.
So what does all of this mean for our listener? Why should they care about Aarti Industries?
Aarti Industries is a company worth watching. Their performance and innovations have the potential to impact a wide range of industries.
Their products touch so many aspects of our lives, from the clothes we wear to the medicines we take to the cars we drive. They're a prime example of how chemistry is silently shaping our world.
It really is amazing.
And as we've learned, they're a company that's not afraid to embrace change and push the boundaries of what's possible.
For sure.
They're the chemistry wizards working behind the scenes to create a brighter future.
That's a great way to put it.
And that brings us to the end of part one of our deep dive into Aarti Industries.
Right.
We've covered a lot of ground,
Yeah.
but there's still so much more to explore.
It's definitely.
Stay tuned for part two,
Okay.
where we'll delve deeper into their innovative initiatives and what they could mean for the future of the chemical industry.
Sounds good.
We'll be back soon with even more insights and aha moments.
I'm sure. Looking forward to it. Welcome back to our deep dive on Aarti Industries.
When we left off, we were discussing Aarti Industries' impressive long-term contracts
Right.
and their strategy for future growth.
Mm-hmm.
And I'm curious to hear more about those new sectors they're dipping their toes into.
Okay.
Circularity, electronics, battery materials.
Yeah.
It's like they're reading the headlines from 5 years in the future.
They're definitely forward thinking. What's fascinating is that they're not just following trends.
Right.
They're bringing their deep expertise in chemistry to these new areas. It gives them a huge competitive advantage.
Okay, let's start with circularity and chemical recycling.
All right.
What exactly are they doing in that space, and why is it so significant?
They're leveraging their chemical know-how to develop innovative recycling processes for plastics and other materials. This is huge because traditional recycling methods often have limitations.
Right.
But chemical recycling can break down materials at a molecular level, creating opportunities for higher quality recycled products.
So they're tackling the plastic problem head-on, but with a chemistry-driven twist.
Exactly.
What about electronic chemicals? That sounds pretty high-tech.
It is AIL is developing specialized chemicals used in the manufacturing of electronics, everything from smartphones and computers to those massive flat-screen TVs. As you can imagine, the demand for these chemicals is skyrocketing as the electronics industry continues to grow.
That makes a lot of sense. And then there's their foray into specialized chemicals for battery materials.
Right.
That seems like a really smart move considering the electric vehicle revolution that's happening.
It's a brilliant play. AIL is focusing on developing high-purity chemicals that are essential for making those powerful and efficient batteries that are powering everything from electric cars to our laptops. They're positioning themselves to be key players in a rapidly growing market.
Okay, so AIL is clearly looking ahead and betting on these emerging sectors. But we also touched on their pilot plant in Zone 4 earlier.
We did.
Can you tell me more about that? Why is this pilot plant such a big deal for them?
It's their innovation hub, This pilot plan allows them to test new chemistries and products at a smaller scale before they commit to full-scale production.
So it's like a playground for their chemists to experiment and refine their ideas. What kind
Exactly.
of impact will that have on their business?
It's going to significantly speed up their innovation cycle, which means they can bring new products to market much faster.
Wow.
This is a game changer for AIL and for the industries they serve.
It's like they're going from a slow initial research process
Right.
to a rapid prototyping model, which
Mhm.
is so crucial in today's fast-paced world.
Exactly. They're adapting and evolving to stay ahead of the curve.
So we've talked a lot about AL's future plans, but it's important to remember that they're also facing some challenges in the present.
Right.
We discussed how the energy additives segment took a hit due to the volatile prices of gasoline and naphtha.
Yeah, that situation with their MMA production has definitely presented some hurdles, but it's also a great example of how AIL is taking proactive steps to mitigate those challenges.
I remember you mentioned they're diversifying their customer base for MMA, particularly in the U.S.
Yes.
Can you tell me more about that strategy? Why the focus on the U.S.?
The U.S. is a major consumer of fuel, and there's a growing demand for higher octane gasoline there. AIL sees a big opportunity to educate U.S. customers about the benefits of using MMA as an octane booster.
So they're not just trying to sell a product. They're becoming thought leaders and shaping the market.
Exactly. They're building relationships, providing technical expertise, and demonstrating the value of MMA. It's a long-term play that could pay off big time.
It sounds like they're really committed to making MMA a success story, even in the face of market volatility.
They are.
What about those headwinds in the agrochemicals and fertilizer segment? How are they tackling the oversupply and unpredictable weather patterns?
They're focused on gaining market share by developing new products that meet evolving agricultural needs. They're also exploring backward integration, which means bringing some production processes in-house.
Can you explain why backward integration would be beneficial for them in this segment?
It gives them more control over their costs and supply chain. By producing some of their key raw materials or intermediates themselves, they can potentially reduce their reliance on external suppliers and improve their profit margins.
It's like they're taking charge of their own destiny rather than being at the mercy of market forces. So it's clear that AIL is a company that's constantly adapting and innovating to stay ahead of the game.
Absolutely. They're not afraid to make bold moves, whether it's venturing into new sectors or restructuring their operations to increase efficiency.
And they're doing all of this with a strong commitment to sustainability, which is incredibly impressive for a company in the chemical industry.
They've set a high bar for themselves and for the industry as a whole.
Okay, so we've covered a lot of ground in this deep dive. We've explored AL's diverse business segments, their ambitious roadmap, their innovative initiatives, and even their unique approach to long-term contracts.
It's been a pretty comprehensive overview.
But as we wrap up part 2, I want to bring it back to our listener.
Okay.
What's the key takeaway here? Why should they care about Aarti Industries?
Aarti Industries is a company that's quietly shaping the world around us. Their products touch so many aspects of our lives, from the food we eat, to the clothes we wear, to the technology we use.
They're the unseen force behind so many everyday products, and they're doing it with a commitment to innovation, sustainability, and excellence.
They're a company that's worth watching not just for their financial performance, but for their potential to make a positive impact on the world.
And that's a wrap on part 2 of our deep dive into Aarti Industries. We'll be back soon with the final part of our episode, where we'll delve into some final thoughts and leave you with some things to ponder about the future of this fascinating company. Stay tuned. Okay, we're back for the final part of our deep dive into Aarti Industries.
It's been a really interesting look at the company.
Yeah, and I think one of the most impressive things about AL
Mm-hmm.
is their ability to balance
Yeah.
those big future-focused bets with a solid understanding of their core business.
Absolutely. We saw that in our discussion of their long-term contracts.
Right.
Each of those agreements represents a unique piece of the puzzle,
Yeah.
and they're managing them all with a remarkable level of expertise and
Right.
strategic thinking.
It's like they're playing a multi-dimensional chess game,
Yeah,
anticipating moves and making adjustments to stay ahead of the competition.
that's a great analogy. And speaking of those contracts, there's
Yeah.
one in particular
Yeah.
that I think really highlights AL's commitment
I
to
agree.
long-term sustainability and responsible sourcing.
You're talking about that 20-year nitric acid sourcing contract, right?
Exactly.
The one that's going to save them a bunch of money
Yeah.
and ensure a reliable supply of a critical raw material.
It's a brilliant move on multiple levels.
Okay.
First, it demonstrates their commitment to responsible procurement practices.
Yeah.
By partnering with a supplier who shares their values, they're ensuring that their raw materials are sourced ethically and sustainably.
And second, it's a savvy business decision
Right.
that's going to strengthen their bottom line.
Yeah.
By locking in a long-term supply at a favorable price,
Mm-hmm.
they're mitigating risk and protecting themselves against future price volatility.
It's a win-win situation.
Yeah.
And it's just one example of how AIL is integrating sustainability
Oh.
into every aspect of their operations.
It's clear that they're not just paying lip service to sustainability, they're baking it into their business model.
Absolutely. And that's what sets them apart.
Yeah.
They understand that sustainability isn't just good for the planet, it's good for business too.
So as we wrap up our deep dive into Aarti Industries,
Yeah.
I'm curious to hear your final thoughts.
Okay.
What are you taking away from all of this?
Mm.
What's the big picture message for our listener?
For me, the big takeaway is that Aarti Industries is a company that's constantly evolving, adapting, and innovating.
Okay.
They're not afraid to take risks, embrace new technologies, and explore uncharted territory.
And they're doing it all with a focus on sustainability,
Right.
responsibility, and a deep understanding of the chemistry that underpins our world.
They're proof that a company can be both profitable and purpose-driven.
They're the chemistry wizards working behind the scenes to create a brighter,
Yeah.
more sustainable future.
And their story is just beginning. I can't wait to see what they accomplish in the years to come.
Me too. I have a feeling we'll be hearing a lot more about Aarti Industries in the future.
I think so.
And for our listeners,
Yeah.
we hope this deep dive has given you a new appreciation for the incredible world of chemistry and the companies that are shaping it.
It's a fascinating field that touches every aspect of our lives.
And Aarti Industries is a shining example of how chemistry can be a force for good in the world.
A great example.
So stay curious,
Yeah.
keep exploring, and who knows, maybe you'll be the next chemistry wizard to make a difference.
That's what we like to hear.
That's it for our deep dive into Aarti Industries. Thanks for joining us on this journey.
It was my pleasure.